Oh, dear God.
It says live in 2 minutes. 2 minutes
Yeah.
and 14 seconds. On the
I think
new...
it just goes once it, yeah.
Okay. Sick.
So how are we looking on the video monitor? Is it smooth? Is it smooth when I wave my hand? Oh, dear God.
I love smooth.
Oh,
Yes.
thank the Lord.
Let's go.
Sorry about that, guys.
Oh my God. Hold on.
Yeah, I'm very disappointed that happened. Had a nice new setup. I had charts. I had picture-in-picture. Had it all going, and then I don't know. Our laptop just decided the video wasn't going to work.
Yeah. Oh my God, dude.
So we're still going to bring you the episode. The production quality won't be as high, but it'll be higher than what you just experienced because 1 frame per second is not.
Can't get much worse than that.
It's pretty bad. How you doing, Eric?
Man, well, we've been through a lot, but I'm pretty good otherwise.
Oh man, yeah. I was really looking forward to this episode, but Murphy's Law
rears his ugly head once again.
I would once again like to point out that when I'm alone in my house, everything is fine. This room is cursed.
Like we ran several tests, like both in your house and in studio, and everything on the tests it seemed to be okay.
Yeah, it's all right. Nobody believes us. Nobody cares. Well, in honor of this momentous occasion, I brought you a nice bottle of the Dalmore Cigar Malt.
Oh my
which
gosh,
is
man.
One of my favorite Scotch whiskeys.
Thank you. Cheers.
A little cinnamon taste.
Cheers, bud. Because this idea of having sort of like a markets only show has been a brainchild for a while. Like this idea of having this show irresponsibly long.
Yeah. So for the people who aren't in the loop, Armand is once again out because he is in his black hole, and Nick is also away. He's in Bhutan, right?
Yeah, he's getting happier.
He's currently exploring the happiest country on earth. Cannot wait to get the download on that. Yeah, you guys know that when Armand's out, we like to really party and just talk about markets until the cows come home. And he's been so long at this point that we've basically just stolen the car out of the garage, and we're just joyriding across the country. We're potentially starting our own spin-off show. So the concept for this show is a union between your world and my world. I live in the world of drawing lines on charts. You live in the world of doing weird things like analyzing fundamentals.
Yeah, business models, SEC filings.
Yeah, and these two worlds don't often cross. One side tends to scoff at the other a little bit. But we thought it might be interesting to bring them together and see how it works. So hopefully you guys like it. Hopefully the rest of the episode goes off without a hitch, and maybe we can do more of these. I'm pretty excited about it.
I'm very excited. I'm excited to see what you have brought in terms of the lines.
Yes, of course, and I'm excited to see what you've brought in the big brain analysis department. Anyway, if anybody is still here watching this stream, please smash that like button. Helps people find us live, helps us grow the audience. If for some reason you are not subscribed to us on YouTube, please subscribe. We're also on Spotify and on Apple Podcasts. And we have a Discord community where we talk about how bad we are at technology and try to figure out where the market's going at alfalfapod.com. You can find all links. Yeah, since Big Nick is gone, I'm told we have to try to do an ad read.
Yeah, dude, like the intro. I was already mesmerized by your intro. Let's try the ad read now.
All right. Oh, you want me to do the ad read? All right.
Yeah, you got it.
All right, sure. I was totally prepared for this. Eric sent me. I thought I could just ad-lib the entire thing, and then I was informed that there are actually some bullet points.
I put some guardrails on you.
I'm required to read. Anyway, as our longtime listeners know, this show is brought to you by ZBiotics, the world's first genetically engineered probiotic that is designed to help you out the next day after a night or even a day of drinking. It was invented by PhD scientists to tackle rough mornings after drinking. This is how it works. When you drink, alcohol gets converted into a toxic byproduct in the gut. It is this byproduct, not dehydration, that is to blame for your rough next day. Z-Biotics produces an enzyme to break this byproduct down. I know it has a name, and I never pronounce it correctly. Acetaldehyde. My God. If you guys didn't check it out already, we did a great interview with Zach, the founder of Z-Biotics.
God, he's so smart.
All the alpha on drinking and hangovers and what works, what doesn't. Spoiler alert: nothing works. But this does. I know that most of you out there are used to this. This hangover remedy thing. You go into a 7-Eleven, you see some weird shot, and you drink it, and surprise, surprise, it doesn't work. So you're skeptical. I was skeptical. Those shots are complete BS. They just go to a manufacturer. They got some white label vitamin thing, for hangovers, and they slap some stupid label on it, and they sell it to you. This is not like that. This is a patented formulation, right?
Yeah, it's a genetically modified bacteria that releases like an enzyme that breaks down that acetaldehyde. It has saved me so many times.
Yeah, so they made their own probiotic.
Yeah.
from scratch, I guess.
Yep.
Just like Mom used to do. Patented, the whole 9 yards. Anyway, these guys are gigabrains. This stuff works for me. I've been on a $100 a month rebill long before they were
before they were a sponsor. Yeah, we were users.
Kind of addicted to the stuff. Anyway, if you go to zbiotics.com/alfalfa, that's the link, right?
That's right.
All right, nailed it. zbiotics.com/alfalfa, you can get 15% off your first order. Helps the show out when you buy it there. They can see that we're sending them customers. And that it helps us keep the lights on in the studio.
Yep.
We don't know if Nick's gonna let us use this room for free forever, so might need to build up the bank account a little bit.
Right.
How'd I do?
Nailed it, man.
Nailed it. All right, thanks.
Nailed it. So this is our pilot episode. I'm fucking pumped, man. I'm excited. Did you have like a way you wanted to lead into this? This being our first.
I figured I would just ask you. You have a way to lead. Jordan has a way to lead into it.
Jordan.
Yeah.
Okay, so from the rafters, we got a donation from Rectum, who just donated $69 graciously, saying, "Take us to Valhalla." Thank you, Rectum.
Thank you, Rectum. We love you.
That is a great way to start this episode.
It's so weird how all the donations are $69. Is there some significance to that number? Probably nothing. Is that our suggested amount? No, there we go.
Yeah, we should issue a POAP for everybody in the live chat right now.
Yeah. We might be going live soon with the episode NFTs, by the way, which I'm looking forward to. It's gonna be a super cool way for people with podcasts to sort of share moments with their audience. It's just sort of like digital merch,
Sounds cool to me.
I know. Yeah, we're definitely gonna have the Taint episode on there. We're definitely gonna have Guns and Porn.
So weren't these guys that the guys that are launching this platform or have launched this platform? Weren't they at the conference that you guys went to?
Yes.
Yeah.
Yes.
And by all accounts, everybody there was cool as hell.
Yeah, super cool guys, young hip Zoomers.
But also, I think I wasn't there, but I heard that they were actually fans of the pod, independent of their platform. They actually just like Alfalfa.
Yeah, feels good, man.
Yeah, who doesn't, man?
Feels good. You know what else feels good? The market is ripping, and by the market I mean Bitcoin and Solana, and basically all the bags that I don't have a lot of. I actually do have a lot of Bitcoin, fortunately, not as much as I should, but I used to have zero, and I had a come to Jesus moment this summer, and I upped my allocation to a whopping 30% or so.
That's pretty good.
Not bad.
That's
Benjamin
good.
Cohen told me I think it was supposed to be 80-20, so I didn't listen to that. But
your own advice to
I'm in it for the long haul. I know this is how every cycle starts. The orange coin rips, and all the maxis are like, yeah, you shitcoin losers,
yeah, idiots.
Oh, they're all going to zero, and then Bitcoin stalls out 2 months later, and then some dumb coin you never heard of does 100x, and
it's all right.
Yeah,
everyone gets their time.
Yeah, but it could be different this time. Could be different. For those of you who don't know, we had a just ripper of a move this week off of, I don't know. So there was maybe you know more on this. Like in the NASDAQ, there's like a registry of QSIPs or something that's published.
Yeah.
And somebody posted like the QSIP for the iShares Bitcoin ETF, which is the BlackRock ETF that we've all been waiting for.
Ticker symbol IBTC.
Ticker symbol IBTC. Good for the TradFi people. It's got nothing sexy like HODL or anything like that. But I think it's probably for the best. Anyway, somebody like tweeted this. It kind of went viral, and I don't know if it was related, but it sure seemed related. But like immediately, we just started uber mooning.
Oh yeah.
And then we ripped up to I think above like 35K ish.
Damn.
Hell of a move. And it looks like we're probably still going higher. We can talk more about that later. What I found out that was like really interesting about this is that apparently this QSIP has been published since like August.
Yeah. So like, so I
don't know why we're ripping.
So my immediate response was like, this doesn't mean shit, right? I posted that in the Discord. I was like, this is probably nothing, TM. And sure enough, it's like kind of nothing. That's been around for a while, and typically these things don't necessarily mean that an approval is imminent or anything. So,
donated $69.69.
Oh my gosh, from the rafters, another donation. Jensinius with a $69 donation.
Said, I appreciate the alpha. Now please pump my bags.
Okay, Jensinius wants us to pump his bags.
Jensinius, we will. I don't know what your bags are, but we'll definitely pump them.
Yeah, we're gonna pump the shit out of them.
Hopefully they're a little different than some of my bags.
Yeah, fucking ETH. Okay.
Anyway, yeah, you know that like famous copy pasta where it's like the fastest way to out yourself as a pleb is to ask what is the reason for the Bitcoin pump today? It needs no reason to put. That one is one of my favorite copy pastas on Twitter. And I feel like that's like kind of like what people are doing right now.
Yeah.
They're like, oh, like stupid things keep happening. We're like, oh, it's because of the QSIP, and the QSIP already existed. And then last week it was because of the fake ETF, and we're like, everyone's like, oh, it's going to zero now because it's fake, and we're gonna dump. And then in reality, it seems as though the market realized that like everybody's like offsides.
Yeah,
so we get like a 10% candle.
So is that your take? Because like let's talk about this pump. Like, what do you think is causing the pump? If it's not just the DTCC, listing IBTC on there, or if it's not the QSIP, like what do you think it actually is?
Okay, so my take on this is the same take I've had for months at this point. Not to toot my own horn, but like
toot away, my friend.
I've been like pretty much fully allocated since mid-summer, and I was posting like inverse Bitcoin charts a bunch, saying like everybody thinks this chart looks bullish, and it's like if you look at an inverse Bitcoin chart, in my opinion, as a line enjoyer, it's just the most bearish. It's just obviously a bearish chart, right? Meaning bullish. And like it's really funny because if you look at a chart of Bitcoin, maybe we should throw a chart up. Sawyer, can you throw a chart up on the screen? Let's do it. Let's do some visuals.
Are you gonna throw your first chart?
We get a chart.
Inaugural chart.
Yeah. So I've always been a fan of the 2-week chart of Bitcoin. Well, not always, but in recent times. And to me, Bitcoin has always looked like pretty simple. Like in last fall, we had this little range period from like the first capitulation bottom at 17.6 all the way up to 25 or so. In reality, I think if you zoom in a little bit on the daily, I like to isolate a little chunk of this here as the accumulation range, and that would be...
This looks like a child has crayons and it's just going ham on your charts.
I'm kind of missing having a mouse, actually. I might have to redo the setup with a mouse. This right here, this kind of like 21, 17K range, this to me was sort of this was the accumulation period, right? And then of course we had the FTX collapse, and then we had this nasty move down.
Wait, is that massive down leg? That's FTX.
So that down leg that we exploded down from the range, imploded maybe is the better word.
Yeah.
Down to like 15.5K. And then we had this massive, just complete reversal. Took the highs of the accumulation range, broke structure to the upside. This to me was just like classic pattern I like to see, which is this is sort of how I like to trade. I look for reversals in the market by sort of identifying a period of accumulation after a market bottom, like a manipulation, a move in the opposite direction, and I look for price to reverse the other way. That's like a sign that you may have the start of like a very powerful trend, and then I sort of try to ride along with that trend. And I think what problem people have with crypto is they're looking at like the 1 hour chart, and if you pull up a 1 hour chart of any crypto, even Bitcoin, which is like the most quote unquote stable. I mean, it's a clusterfuck.
It's just highly volatile.
It's just like, yeah, it's very hard to make of it. It looks like noise, right? But if you zoom out a little bit, so I like the let's look at the 2 week chart for Bitcoin here. This to me looked pretty clean, right? So those of you who understand basic market structure, you know, we look for higher highs and lower lows when we're in trends, right? So basically the entirety of the year, we've been putting in these sort of higher highs, lower lows. Maybe I'll just draw them, right?
Well, that looks pretty good.
There you go. There's your higher high at 25K. We had this kind of nuke in the spring during the Coinbase scare, right? Down to 20K. Look where that bottomed. It bottomed like right in our range, that range that I think was sort of the base range. You can see how quickly we just snapped back out of that. And then that was followed by this impulsive candle up to, you know, to basically 30K, where we sort of stalled out. But we did put in this new high in the spring at around like 31.2K or so. And then here's where people kind of get tripped up, is they say like, oh, okay, this is a lower low here.
Yeah, and it also looks like
it
also looks like a fair value gap that might want to be filled, and who knows what happens, you know, within that range. That's
let's not get ahead of yourself here with these fancy terms, Eric.
Sorry, I've learned a thing or two from ICT.
I know. You're trying to flex that newly found knowledge. What happened in the spring that I thought was interesting was that we had sort of a second pump up back into the 30s, but we never really closed above that initial high, right? So as far as I'm concerned, if you don't get a closure above the previous high, you haven't put in like a new higher low. So to me, like the structure always was bullish above like 20K basically on the 2 week chart, which would have been a dip that was very, very scary for people. Like if that happened, and to be fair, I did think like this looked like too perfect of a setup to me. Like I'm like, oh, this is what we want here. We got a couple equal lows after the sell off. This is the perfect scenario for exactly what happened last fall, which is that we have this kind of accumulation range, and then maybe we get this nuke down. Everybody's like, oh my God. In reality, we're just trading back into the prior accumulation range. We break back into the range, nice manipulation, and boom, up.
Yeah,
that's what I was waiting for.
Same, like
that's what I was waiting for.
That looks like ripe to be run, like for liquidity.
Yeah. But fortunately, the other thing I was saying is like, look, even if I'm very sure about something, I'm never right more than 65 or 70% of the time. And realistically, it's like you're basically trying to flip coins with small edges and then risk less than you're making on the trade, right? So it's sort of delusional to think that you're going to be right 100% of the time and I'm going to have all of my chips off the table. So what I basically came to the, you know, I just had this moment with myself. I'm like, look, you've been trading in and out and in and out and in and out for like 2 years. Like this is just value. We're in a bull market. I don't know why everybody's so bearish. Like there's just been this like just consistent uptrend in Bitcoin, and I was just like, look, I'm just gonna allocate, and I bought my last chunk of Bitcoin. I think at like 26K or so.
Nice moves.
And yeah, like we never dipped. So the question everyone's probably asking now is like, where are we going?
Right.
Where are we going? Is this going to be a fake out? There's probably a lot of questions, right?
Yeah.
let's zoom out a little bit. Let's look at the monthly chart. And when I look at the monthly chart, like I see a very bullish chart still. Like a lot of altcoin charts, a lot of crypto charts. Like if you zoom out far enough, they look bullish on the daily. They sometimes even look bullish on the weekly. But then if you look at the monthly chart, you're like, this could just put in a lower high and we could go back down. What's interesting about Bitcoin is that it broke monthly structure to the upside earlier this year. So our lower high on the monthly was from the August high, about 25K. And then in the spring, we had that impulse candle up. We broke that 25K lower high, and we shifted market structure to the upside on the monthly. I mean, that's a big deal. Like you don't want to fade monthly structure when you're trading.
So when you see that, right? So you see that candle close above the level that you just highlighted there. Is that your signal that you get a close above that?
So here's what I'm looking for right now. Like step one, we've had this like insane supply here on Bitcoin, right? Because for the last very long period of time, this sort of 28 to 32K range. In the last bull, everybody was buying the dip at this level. They bought the dip at this level in late 2020. They bought the dip at this level in the spring of 2021. And then when we broke down, everybody bought that level again in like May of 2022. But what happened? We nuked through that 28K level.
All the dip buyers wrecked.
Yeah, so now you got all of these dip buyers just massively underwater, right? And it's not surprising that when we traded back up to that level initially, we sold off because there's a lot of people who are just sitting there like, oh, thank God I'm break even.
Yeah, everybody just wants to get back to even. Everyone wants to get back to even.
Yeah. And then so we double tap there, and a lot of people were like, oh, double top. There we go. But now that we've blasted through it, we have the opposite problem. Well, I don't think it's a problem, but it's a problem for some people, is that everybody who shorted up here on these two taps,
right?
Now these guys are underwater.
Top. Yeah. So okay. So that resistance flips to support then in your mind.
Well, that's what we want to see, right? So and now in theory, if this is truly a good breakout here, when price trades back into this, if it does, like Bitcoin doesn't give these clean retests sometimes, but if we trade back into this sort of 32K to 28K region, now you've got the opposite dynamic. You've got all these underwater shorts who are like, oh, thank God I can get out at break even. They close their shorts by buying. That buy pressure.
So this is pretty support. This is pretty cool because, you know, we went up to, like you said, almost like 35K or maybe 35K, and now we're probably at 33-ish. Like it's like highly likely that we actually go back into that 32K range. And what you're saying is, what I'm hearing is that would be sort of an area to look to get long, like for people who aren't already long enough.
Yeah. And like personally, I think that if you do get a chance to get long there, it's probably you're probably going to get wrecked. I mean, when Bitcoin moves and it's really moving, you get very few chances to buy these dips. I mean, look at this huge move we had earlier the year. This one wick was like sort of your and that looked terrifying to buy that wick.
Oh yeah, it looks like it's over.
Yeah, it looked bad. I mean, I bought this wick, humble brag,
nice moves
in the spring. Thank you. Also, like similar dynamic in the spring. Everybody was like, "It's over, it's over, it's over." That ended up just being a really, really small window you had to buy, and then we blew up. And then, you know, we saw in the summer, everybody's like, "Okay, I'm gonna buy this dip here at 27, 28K. I'm gonna buy the dip in the middle, and then we're gonna go higher." And then it just nuked, and then all those people got wrecked. So when Bitcoin wants to go to a target, it just doesn't let you in, and you sometimes have to get like really, really, like, I don't know if gambly is the word, but you have to be willing to enter on really low time frame charts. You know, like even like that, like yesterday we had the FUD. Did you see where like how they basically said the QSIP is the QSIP is like removed from the NASDAQ now?
Oh, I did see that.
Yeah. So people were like, oh, the QSIP's gone.
Bitcoin dips.
Bitcoin tanked, right?
Yeah.
Sometimes a move like that is like your one
That's your chance. That's your chance to buy a dip.
to kind of get in, right? And then yesterday, like we had this 1 hour candle here, this one, and on my screen, I guess it's blue, but on most people's, it's a red. This down candle, and what happens? Price quickly wicks into that down candle, and that was all you had, and now we're going higher. And I think there's probably a good chance that we don't retest that level, and then we just go up again, and people continue to be sidelined.
So what you're saying is up only. Okay, so this is awesome, by the way. Thank you for that. I think like, because I haven't looked at charts in the way that you do. What I see is sort of like it's sort of like this shifting narrative, right? Where we're like BlackRock and et al., right? There's like seven companies that are applying for spot ETFs. Like the ETFs that supported Bitcoin before or tried to like mimic Bitcoin price were using futures contracts before, and these are going to be spot ETFs, meaning they're going to be like physically what's the word? They're going to replicate the price of Bitcoin using physical Bitcoin. So when I see that these things are about to launch, what they need to do, they need to buy Bitcoin to have that for retail investors to actually purchase the ETF and have that, be redeemable for their ETF shares. So what I'm assuming is that this move up is actually the ETF applicants buying Bitcoin to seed their ETF.
What I think is happening is the market, like, you know how markets work, right? Like sometimes you have an asset, you're like, this asset is not priced correctly.
Yeah.
It is clearly underpriced, or it is clearly overpriced. And it sometimes persists that way for a while.
Yes, absolutely.
And we had a perfect storm in crypto, right? Where we had FTX last year, and then they nuked all of the banking rails basically with Silvergate. And it just really cut a lot of large buyers out of the system, or you had a fund and you just don't want to touch anything. You're really toxic. And this happens a lot in the trough of the bear market, right?
Totally.
It's just you the lone survivors of the apocalypse. You're like getting off the ground of the battlefield and dusting yourself off, and you're looking around and like everybody's dead, and then you just have to like kind of rebuild civilization. So I think for a long time, the price has been below fair value, and like I was screaming also. I couldn't believe actually that we dipped as low as we did over the summer. I mean, I kind of could, but also not, because like in my mind, the odds of this ETF happening were very high.
I mean,
right?
it's got to be 95% at this point probability.
I mean, there's a couple of analysts who say like, yeah, it's 90 plus in the next year.
Yeah.
And a very just basic sort of back of the envelope calculation would say that like, okay, well, Bitcoin is worth a lot more than $24,000, $25,000 if it becomes like an ETF that like every single financial planner in the world can like put their clients' funds in, right? Of course, that's the case, and yet the price languished for a while there, and then boom, snapback move.
Right, and now it's snapped back, and now we're at 34 and change, 34,000 and change. And I guess my question is like, so is this move people front running the seeding of the ETFs, or is this the seeding of the ETFs, or is it a combination of both? And also, once these ETFs launch, the investor demand for the ETF is going to dictate how much Bitcoin these like ETF deliverers have to actually hold, right? So like, if there's no demand on the retail side for these ETFs at all, then these guys might have bought too much Bitcoin in advance. And then that might be your sort of like sell the news event where like ETFs get approved, you get a spike, but then it comes back because there's not enough demand. Maybe they oversupplied.
My understanding is that the market dynamics of these funds buying, preceding, whatever, are basically inconsequential at this point. So everything you're seeing in terms of price movement is the market front running this
sort of
news.
like the retail buying is what you're saying.
Or I mean, there are like funds that are invested in Bitcoin. Like there's definitely large players out there who are allocating to Bitcoin, but it's definitely not mainstream yet. But like this isn't ETF seeding flows, right? This is the market snapping back to price Bitcoin at the correct price given the probability of an ETF being approved and what is going to happen afterwards with these sort of like consistent flows that may flow into the asset.
We might see sort of like fresh money coming into crypto for the first time in ages. You like stablecoin demand has just plateaued for, I don't know, a year. So like this could be like the moment where new money comes in to the space, you know, starting with Bitcoin.
Mm-hmm.
And does that, I guess like my main question is like, how high could this go based on what you're seeing on the Magic lines? Because like if this isn't even the ETFs seeding, you know, their holdings in anticipation of demand, like where do you actually see this thing going to? Like we're at 34 and change, 40, 45. Like what do you see as like a reasonable outcome of this resurgence?
It's a great question. Let's pop the charts back on. Show you some thoughts. So on a very high time frame, right? Higher than monthly. We have like a different sort of market structure, right? And we basically have this sort of critical high here at 48K. Now this is like the really big number, right? If we're going to go back up to 69K plus, we first have to take out this 48K high. That will signal to me like a shift in the even higher time frame structure that is probably going to inevitably lead to a new all-time high.
God, and look how many down candles there were right after that moment. Like this,
that was painful.
That's gonna be like, I don't know, because like when you look at like when I learned very rudimentary technical analysis, like when you see a down move that's that fast with no buying sort of anywhere in there, price can move through that pretty quick, no?
Yes. Yeah, it works in both directions.
Yeah,
for sure. Which means, like, I think there's a chance we could go up very quickly. Like the main thing I'm looking at right now is this. There's this huge monthly supply overhang, right? And let's just use the bodies of the candles just to get a little less noise in there. But let's call it 38K to 48K for those people who aren't watching this live. This is kind of the first stop for price, I think. I think it's pretty unlikely that price just nukes straight through all of the supply, breaks structure, takes out that high. I don't think that's going to happen. It could. And funny enough, like if you look at a chart of the NASDAQ, that's actually kind of what it did. Like this is the similar analogous monthly supply here.
It is literally what you just described.
And we just went straight through it. Absolutely straight through it. So NASDAQ had this like big supply overhang, like up to like 15.4K or so. And we just got 1, 2, 3, 4, 5 straight mega monthly candles, ripped through the entire thing. You didn't get any pullback to get into that move. And now we're pulling back. So NASDAQ was very brutal for people. Like you had to get in at a painful spot. And then if you missed that leg up,
you just missed.
You just kind of missed it unless you were just willing to just market buy YOLO, like stops be damned. I just need to get in on this move. So it is possible a similar thing could happen with Bitcoin. We just go whoop and just go straight through 48K. I think that's less likely. And I like to often look at the mid-range of these zones as potential targets. Like price likes it's like an equilibrium point. So the mid-range of this zone is like 43 or so thousand.
That would just be freaking
Pretty nice target.
That'd be
So
special.
definitely wouldn't shock me to see a move up there, a little pullback, and then continue onward. Certainly possible. We have to be realistic though and say that if we're talking about like the higher time frame here on Bitcoin, we're still bearish on a very high time frame. And if I sort of draw this structure out for you with like a path, right? We just ignore all the wiggles. Here's your higher low, higher high, your lower low, higher high, and then boom. So we could, like if this was like a 1 minute chart, you could see price trading here into 42,000 and then going back down and then either retesting support and coming back up or potentially running the lows. And with no context of what's happening in the real world, I would say that that's a possibility because in reality, like this whole prior cycle you can view as like this accumulation range.
Right.
We tapped into it, but not really. We kind of had one tap and we left. And often you like to see price either go deeper into that zone, and the mid range of that zone is like, 11.2K, or at least like a double bottom, maybe something back into that range we talked about in the 20,000 range.
Jesus.
Yeah, I just can't, and I hate saying this because crypto has a way of making you say like, I can't believe that just happened. Nobody saw that coming.
Just humbles everybody.
Yeah, I can't see that happening again, honestly. Especially if there's no ETF, maybe.
Oh my God. Can you imagine if ETF just gets shut down? Then it's like over.
I think even then though, I think there's still a good chance we just sort of double bottom in the 20K range.
Capo would just be salivating.
Capo would be he'd be very excited. I think if you're super sidelined and you wait long enough, like price probably comes back to this range we had in the summer. So now in retrospect, when you look at what price did on the monthly and you see these two down candles, this is basically an order block from 32,000 down to 25K. You'll look back and be like, oh wow, that was my big chance to get on board. So it's possible that given a long enough time frame, like if price does hit its target, because price is usually reaching towards some sort of supply when it's bullish, and when it hits that supply, you often retrace and occasionally break structure and then kind of go back to maybe the origin of the move, maybe reaccumulate and go back up again. So you could see price return back to 28K maybe after it hits 45K or something.
God, painful.
It's possible. But like my whole shtick, like a few months ago, my whole shtick all year was like, look, I'm pretty sure Bitcoin is going into this rectangle up here. I'm pretty sure it's going into the 40,000s. I think there's a very high chance it goes there and then goes back to new lows. Like there's a very high chance it goes there and just corrects 50%. Like I think all that could happen, but I really want to get this move. Like this is the move that really matters to me. And then I can sort of take some profits there, take a step back and breathe and just and wait for like the next sort of big swing when I have like more information. But that's kind of what I was focused on.
That's helpful. When you look at a move like this up to the $40,000 range, do you have like a time frame on that? So like, because we do have time frames on ETF approval. I think their deadline is like January of next year. Like, do you have sort of like your own mental model of that time frame, or are you just saying, "Fuck it, I'll just buy," or you've already bought? But like, are you saying like this is a good, okay place to get long, and that's okay, and ride it up, whatever percentage that is to the 43K level, and then reassess?
I mean, time frames are tricky. You can draw like these meme trend lines if you want and say, all right, well, November 2024 maybe.
I mean, like, if it takes that long, I think people would be disappointed.
Yeah, I think they will, but it might. There's a question of like how much is this going to end up being a sell the news event? Yeah. Like it wouldn't have been a sell the news event if it happened a week ago, because people would have been so offsides that like price would have just, and it might have like really taken people out and gone up, right? But there is a point where it gets so priced in, it becomes such a certainty that the actual price gets ahead of the flows. and then it's priced to perfection. And then when it falls shy of perfection, you get these sort of like sell-offs. The people who are smart money who got in early take profits. The people who are late get liquidated. They become forced sellers. Price tumbles down, and then that's how these things sort of take place there.
Okay, so do you want to keep talking about Bitcoin? Because I actually think that, the Bitcoin chart can be sort of an indication of other things that could potentially move. Like,
yeah, let me leave people with just one or two quick thoughts so that so they have something actionable. You can go back to the chart if you want there, Jordan. What I want to let's start with what I'm really concerned about first, and I think there is legitimate reason to be concerned here, right? We've basically have been in this range from, call it 32K to 15K for a while, right? The bull case is that we are breaking out of this range, that this is like a giant accumulation range. We're breaking out of that range, and now we're going to target the 48K high and then eventually the 69K high. That's the bullish thing, right? It's not a given in trading that when you break out of a range, price just goes up. Otherwise, everybody would just buy the range breakout and we'd all be billionaires. It's just simply not that simple. So the scary scenario is price does something like this, kind of languishes up here, and then quickly goes back into the range, retests the top of the range, maybe pokes it back above. But then if this happens, like it's probably like really bad. Right,
really?
We're talking about like a deviation over the top of the range, a failed breakout, back inside 32K. That to me is ugly. So step one for me is, can we close the weekly above 32.3K? Right, that's step one. Step two for me is, can we close the monthly? Right, because the same thing is true here on a monthly chart. Oops, let me get back to the monthly here. Like when you have a range like this, you want to see a clean range breakout. Like if the monthly if we end up going back inside 32K before the month ends, then this nice green thick candle ends up with as a mediocre candle with a long wick.
Yeah.
So when price trades out of a range, the wick goes up and then it ends up closing back inside the range.
Bad.
There's a high probability that price then wants to first test the mid range, which is like 24K.
24K is the
but
mid-range
then
of that. Wow.
potentially go back down towards the bottom of the range, which is 15K. So that's the. I'm pulling the ripcord if that happens, because I think it's too there's too much risk here.
Well,
so
I don't see that happening.
I think it probably doesn't happen. I think it looks good right now. But I think we have 5 days until the end of the week. The end of the week is basically the end of the month. So these two candles are basically going to be synonymous. And I think that'll be a pretty high signal thing that people can kind of hang their hats on if you're looking for,
So what was that level you mentioned? 32.3. Is that what you said?
Yeah, ideally, this 32.4 level, basically we had this this kind of weekly supply zone here, which was the bane of our existence for a while, that we just broke out of, and the high of that zone is about 32.4K. So I really want to close like above that previous supply, and then flip that zone into a demand zone, so that we can have some sort of base to
we
go
got that,
from.
motherfuckers. We got that.
All right, cool. Then enough Bitcoin for you?
Yeah, well, I think Bitcoin is so sort of like instructive for everything else, right? So like to go through that in the depth that we did, I think was awesome, and I appreciate you sharing your charts, because that's really cool.
You're so welcome.
So I don't know, like one thing that I was thinking of is, and I don't know where you want to go next with this, but one thing I was thinking of when I was thinking of Bitcoin, I was like, well, what else? What else is going to probably go when Bitcoin goes, which it is right now? And, next thing on my list was like the Bitcoin miners, which I fucking hate so much. I hate the Bitcoin miners so much on like a business standpoint. I think they're so stupid. But then also I was thinking, like, am I middle curving the shit out of this and just to like jump to the conclusion. Yes, I think like I am so middle curve when it comes to the Bitcoin miners because I'm like, we know this meme, right? With the middle curve is like crying and the left and the right IQ curve is like, no, just buy the Bitcoin miners. I was thinking like, okay, so these things have like negative cash flows. They are entirely dependent on the price of Bitcoin, and to produce more Bitcoin, they're actually like spending more money than it takes, to produce more. But then I just started thinking like, hold on, they hold a ton of Bitcoin on their balance sheet, and their only job is to produce more Bitcoin. If the price of Bitcoin rises, just own the miners. Like I think that's like the low and high IQ stance. If the price of Bitcoin is rising, own the miners.
You know what the miner stocks remind me of? They remind me of like the 3x lever ETFs.
Yeah, I think so too.
Right?
Yeah.
Where if you trade them in like short periods, they crush sometimes.
Yeah.
Like they just like, and sometimes in short periods of time, not even that short. Like sometimes it could be like a year or 6 months or something.
Yep.
Like the mining stocks will just slaughter Bitcoin price.
What a fucking poignant thing to say. I think that's exactly right. These are like trading vehicles, not investment vehicles, because like over time, you don't want to hold them. You don't want to hold a miner because they just like bleed your money. So like the number one miner, like the largest one, is called Marathon Digital, ticker symbol MARA. Marathon Digital just announced, I think today or yesterday, that they have to issue more equity, meaning like they're going to sell more of their company just to finance their operation because their operation is negative cash flow. Like the production, meaning like you spend energy, you create Bitcoin, is not producing cash flows. So they have to generate sufficient cash flows outside of the business to keep their business afloat. Right? This is the business model of the Bitcoin miners. So Marathon, being the largest of them, is the one that I often trade. And I'm thinking like, what a shit business. But also now I've flipped that on its head. I'm thinking, Marathon, what a good opportunity to fucking buy Bitcoin because they hold on their balance sheet, almost 14,000 Bitcoin alone. And every month they're producing 1,000 more Bitcoin, some of which they sell to like finance their business, but a lot of which they hold. And particularly in an environment where Bitcoin price is rising, that gets pretty compelling.
Well, I have a chart of Marathon here.
Hold on. This is the Marathon chart?
Yeah. It's one of the worst charts I've ever seen.
Oh, this looks like complete dog shit.
We've got a 3-month chart up of Mara. So this thing goes back to 2012. I didn't even realize this thing had been around that long. We peaked at $230 or so back in 2012. What was the price of Bitcoin back then? Like $100.
Yeah.
Now, the price of Bitcoin now is like $35K.
How do y'all stay in
the price
business?
of Mara is $9.
They've never. I think I went like quarter by quarter by quarter. Like they've never generated positive cash flow.
I mean, this
shocking.
thing looks so down only. What's really astounding though is if you pull out the Mara Bitcoin chart.
Oh,
we can't even see it. Like it's just
wrecked.
Like I have to zoom so far in to even pull up the.
This is exactly those triple levered.
So like I'm still you got to watch this video to see the zoom. It's
like the number of zooms you just pulled off.
I can't. It's so bad. It's really bad. I just know somewhere out there was some poor soul back in 2012 who had the big brain idea that the miners would outperform Bitcoin. Rip to that guy. The crazy thing is like if you plot this, it like trading views like percentage thing breaks. Like it just tells you it's down 100.0% versus
like,
Bitcoin.
It doesn't even it can't even register.
Like if we go all the way back to like we could be like pretty generous here with this thing and like we could cut out that whole move up to 200 or so, and if we go back to the chart to like where is this? Oh my god, I can't even zoom this. This is why I need the mouse. It's like I'm playing StarCraft here. Too many APMs to zoom this chart. There we go. So if we just go back to 2014, where this thing was already down very bigly, it's still down. Wait, I haven't even pulled it up all the way. Where is this? Okay, we are down 99.96% versus Bitcoin.
Okay, so
This is the definition of down bad.
I mean, yeah, that's from 2014. I mean, 2014 was a long time ago. Is there a shorter time frame? Like, just to use your example, right? Like these triple levered indices or whatever, like TQQQ, for instance, is the triple levered NASDAQ. And that will also look like this if given enough time, just because the math of the way those things work.
Yeah, given like 700 years.
Yeah. So like ultimately those things, like you don't want to hold them because like you get this decay, which we can go into on another pod. But like ultimately it will go to like essentially zero against the NASDAQ. But like on a shorter time frame, you do see like pretty good spikes. So I guess like what I'm asking is on a shorter time frame for Mara, like you do outperform Bitcoin at times.
Yeah, and I think if you zoom into like a 3-month chart and you sort of ignore the complete bloodbath that came before this, you do see like a bit of a structure break. You can squint and see a bit of an accumulation period, and if the stock were to just take out its 2021 highs from last bull, I mean you're talking a 315% gain in dollar terms, which is pretty significantly more than Bitcoin from here. Is that worth the risk? I don't know. Like I don't know if I want to touch the. Okay, so first of all, Mara looks terrible. Riot looks a little better. The other miner. So if you look at a Riot chart, I mean, I think that kind of looks like it wants to go higher. It's made higher. It's made like higher highs at least than each of the bull market peaks, and
Sure.
you could make an argument that this thing is going to go higher again this cycle, and then we go $80 was the peak, and we're at $10 now.
Pretty nice gains on
That'd be a
that.
smooth 800% to the last
Pretty
high.
nice
So,
gains on that.
yeah, I think if I'm trading this, I'm trading Riot. I'm still not a buy and hold long-term investor. I think if you zoom in a little bit more, you look kind of tasty. What's interesting to me is that we hit $20 this summer when Bitcoin was at a much lower price than it is today.
That's exactly what I'm thinking.
And currently, Riot's trading at $10.
Because I was shorting the shit out of these things at that time. And now, just like you said, Bitcoin price is higher, but the stock of these miners is lower. So like I'm with you. Like I'm basically just thinking that is opportunity. And do I want to hold these things long term? Fuck no. I think that the worst businesses on earth, would I even want to own one or invest in one ever? No. But like in an environment where Bitcoin's rising, like this can move. And because I'm a fundamental analyst, like I look at the break even price of production for their Bitcoin, right? Like how much do they spend to basically like win one block on Bitcoin, which gives them 6.25 Bitcoin. And Riot is the best of the bunch, like the most efficient of the bunch. They're not the biggest. I mean, Mara has more miners and they have more Bitcoin on their balance sheet, but Riot is the best, meaning the most efficient. And I think either of these, for me, like now I'm looking at like, should I buy some leap calls in these stupid ass businesses that I hate? And I think the answer to me is yes. Like, because why was the price $20 when Bitcoin price was half of what it is now?
It's a great question.
Yeah.
And yeah, like it's almost a 2x from here just to the summer high. In a period where Bitcoin has gained 30 or 40 or 50%. Do we lose we're good? Okay, cool.
Okay, yeah. So I guess like that's how I'm thinking about it, and also I'm just thinking like, well, which version of me is middle curve? Maybe fucking all of them, but like like I think the one that I'm like so focused on on the fundamentals is like, oh, these fucking businesses, they negative cash flows and shit. Like I actually think that, maybe it's just like when Bitcoin goes, these things go really hard. And I think I want to like own long calls.
Well, good news here. We got some. Our charts laptop decided to reboot in the middle of the stream, so
cool. Well,
might be a couple minutes before we have the chart back up.
Back to our beautiful faces.
Yeah, but for those of you listening who can't see the chart anyway, we were pulling up a Riot chart. We saw current price about $10, $20 high just a couple months ago when Bitcoin was 30 or 40% lower. Interesting play if you want to be a degen. You go call options on the miner. You don't get married to the position, but
could be fun. That
seems like a nice return to
could be fun
to parity there if we get that. Is there anything else you're looking for in the realm of the crypto bull trade?
Well, obviously, like ETH is something that I'm like more tethered to. Like that's something that I like firmly believe in. And when Bitcoin is mooning like it is, and ETH is sort of stagnating, I'm wondering like when ETH, my friend.
When ETH is a great question. Before I answer that, I want to get this laptop plugged in. Jordan, do we have a power? Can you plug that in? Cool.
Techno Kings back
we're really persevering here today.
Techno Kings back again.
Oh, so we don't have.
There's an outlet right here.
Yeah, just
Jordan.
plug it in here if you wouldn't mind. Man, we are really walking to school uphill in the snow both ways today to bring this pod to you guys. You would think that we would have two power adapters for our two laptops, but apparently we're not that technically sophisticated.
So before I just heard the laptop restarting. This is good news. But what I think like
you were basically saying when ETH, if I
yeah,
understand you.
but also like we were talking broadly more like on the idea of like, okay, so if Bitcoin goes higher, like if Bitcoin just sends it, what else fucking sends? And I like my hope would be that like ETH also.
What else sends like immediately, or what else?
No,
eventually.
Ultimately.
Sends? Okay.
And I think where my mind goes off of that is like, well, hopefully, ETH and Coinbase. These are two things that we've mentioned on Alfalfa so often that like I believe in, and like the price of Bitcoin going higher, I think further validates the price of ETH and Coinbase going higher.
Yes. Like obviously if Bitcoin goes up, everything else is going to go up. I think the main question for me this cycle is, are we just going to do one of these like fully redacted, all the dumb shit just goes to the moon cycles where everything goes up? Or is crypto going to start looking more like the traditional stock market where you have some projects that do well?
Yeah, consolidation in sort of the winners, right? Like,
yeah, and we're seeing like early signs of that right now. Projects like Maker come to mind. Like Maker has been one of the best coins to own for a while after being the whipping boy for a long time.
Yeah, you called that like 6 months ago or something.
Yeah, I didn't trade it, so it doesn't count.
I called Link probably like a month and a half ago or something. Didn't buy any.
I mean, Link, I always told myself I would just buy when it broke out of the range. It just didn't seem fun to be in this like kind of endless sideways range, for like 5 years. I mean, that coin has just gone sideways for so long, but it's made quite a powerful move out of that range recently. We busted above $11 after ranging around like $6 or $7 for forever. So a nice solid move to the Marines who caught that so far. Question is that gonna keep going? And I think the answer eventually is yes. Like I used to be a big Link guy. I had a lot of Link coming into the last bull run. For people who weren't here, I mean, Link crushed during the last bear market. it crushed. It was like the best thing you could own.
I wasn't around.
It was born in the bear, and it crushed in the bear, and it basically basically topped in terms of ratios before the bull market even started. And then especially against like Ethereum, it was just like a horrible, just forever down only trade. Yeah, let's pop the link chart up. We got the link chart here.
Damn, that's quite an accumulation range right there.
I mean, this is a hell of a range. Like this thing just went sideways forever in a look at this tight little range. This actually did exactly what I gotta pull up this tweet I made about the link in the spring. It did exactly what I was kind of looking for, which was this long range. And then what do you have here in June? You had this little dip below the range. Some call that a manipulation move. Some call that a spring. If you're into Wyckoff, whatever you call it, that's oftentimes like the launch pad. You get a long range, you get one last nasty move down, shake some people out, and then boom, off to the races. So Link has a similar setup to Bitcoin in that it has like a big supply overhang to clear. Link's is somewhere about $15 is sort of the mid-range of that. But this sort of $12 to $18 range is going to be like a big thing to climb. So I think if you miss this move, there's a good chance it doesn't blast through. You get a retrace. But like I'll probably add some Link on any sort of meaningful dip in the short run here. But like, God, this is similar to Bitcoin, right? Where you're like, how do I get in on this move? And what did we have? We had on Tuesday with QSIP FUD, this fair value gap, boop, little wick down into it around
nice.
like into that $9.60 range, and then immediately out.
So what's the founder's name? Sergey Nazarov or
Yes.
something. He's like making the rounds right now, like just like pushing this sort of real world assets narrative, where there's like Swift. Swift is using CCIP by Chainlink, and like fucking Vodafone yesterday, and just so many examples of just like real world assets being taken on chain through Chainlink, which is intriguing, because I was always under the impression that ETH was going to be the medium by which sort of like real world assets come on chain, and he's certainly making his rounds, I guess.
Link is interesting to me because I've never really subscribed to this more Bitcoin-esque vision where like the whole world just becomes wildly decentralized and it's just like full decentralization or bust. I always saw like a lot of use case for crypto that like kind of had like one foot in both worlds, gave people the optionality of being like as decentralized if they want to be. But like the reality in my life is that like I'm very happy to use like a lot of blockchain based applications or use cases that aren't fully centralized, but that offer me like more conveniences or functionality. And I like stable coins are a good example of this. Like USDC is not decentralized, but it's like the best use case of crypto that we currently have. And I think oracles are interesting because oracles sort of like facilitate this bridge between the two worlds. And anything that an oracle is doing or facilitating is never going to be decentralized to the extent that the maxis like want it to be, right? But like to me, that's okay. Like it's fine if we live in this world where we can have this like hybrid. And I think that like if you want some exposure to that in your crypto portfolio, and I think you should have some exposure to that. I think it's a bad idea now to have zero Link in your portfolio. I don't know if the number is like 0.5% or 1% or 10% or I don't know. But I know that the number probably shouldn't be zero. I think like this is probably like a big winner take all market too. I think like Link probably ends up capturing like just the lion's share of that market is best I can tell. So definitely on my short list of stuff to to get into. But I mean, like the ETH chart for a long time looked like horrendous. Jordan, I'm going to pull up the Link ETH chart just real quick. Like this was pain for the Marines. I mean, look, I have to keep zooming out.
Yeah.
Woo! Jesus.
Yeah.
Yeah. How much was this drawdown from peak to trough? Yeah, Link lost 94%
Against ETH.
against ETH,
From peak to trough. Oof.
which is just insane. And going the other way, I mean, not even from the very beginning, they gained like 16x versus ETH.
Right.
And that wasn't even from like the dawn of it. That was when it had already gone up a little. That was like already like 2020. So, you know, good reminder to take profits and to not marry your bags too much. I mean, the Marines were like the largest, loudest contingent on Twitter for a long time. And
God,
then they
okay,
just
so
got uber wrecked.
this is going to be like a good question, I think, about, you see a chart like this. So when I started investing, man, it was like late 90s, right? And I saw a fuck ton of charts that looked like this, that were all like the .com stonks, you know, like so many of them just like went parabolic up and then just like went down to essentially zero. Like, and you know, like history is our guide. Like those either went to zero actually, or like you had success stories that like took 16 years to like go back to their highs. Like when you look at a Link chart like this, is there anything like, where do you see prices reverting to if there is a success with Link? Like what would look like success to you? You know, like, because at $11 today or something, like is that success? Like Link has sort of succeeded? Like what?
No.
Like, no, yeah. Like so like what is like where does this thing go to a place where it's like, okay, yeah, this was a good pick.
I mean, the longer these things range, the more fuel you tend to have for your upside move.
Dude, and that range was so long.
It's so long and so flat. Like
So, like, literally nothing.
Perfectly flat.
Yeah, just like
Someday if Link goes to $1,000, that's gonna look like the most like forehead buy of all time. Which is why I think I gotta buy a little bit just to make sure I don't do that. But yeah, no, I don't know what ultimate price success looks like for Link. I mean, this is one of these coins where like I'm cool having like a point or two in the portfolio, and then it's gonna make some nice. Some swing trades.
Well, like Sergey's vision, like, and we can just like zoom out of Link anyways, but Sergey's vision is just like there are quadrillions of dollars that are off chain, and versus like the a couple, maybe like 1 trillion or whatever that's on chain, and it's probably even less if you're actually talking about like truly on chain. So like the runway is pretty fucking long. You know, even if Link doesn't capture, a majority of it, like, the runway is pretty fucking long.
Yeah, I hate doing these things where you're like, but the market size.
I know, the TAM, baby.
The TAM is not only every human on Earth, but all the potential alien civilizations that could be drawn to Earth if this were to, and like what kind of, it's at least in the quadrillions, like I hate using that when we invest. But there is like a grain of truth to it. Like just like the size of the derivatives market alone, and it makes all of crypto look like just the tiniest, most like the entirety of the crypto market cap. Are we even back over $1 trillion yet? I don't even know. But like it's
probably
like
barely.
Even if it's $2 trillion, $2 trillion is nothing.
I often use like, and look, a lot of crypto investors aren't even old enough to like remember those days, right? Like, and I was barely even old enough to like even be involved in those days, like the early .com fucking bubble, and then burst, and then that fucking slow march back, and to realize how long that took to like get back was like way longer than anybody's anticipating. If I use that as a proxy, but like some of this shit might survive, like, and even talking about the miners themselves, like, like I talked about how cash flow negative they are on an operating basis. Like, you know who else was for fucking 25 years? Amazon was fucking cash flow negative for 25 years. And guess where they are now? You know, one of the most valuable business on earth. And I actually think that these miners are playing like a similar game. You know, like, you know, you need to produce X amount of exahashes, and it's highly competitive. And it almost feels like that same style where it's like a winner take all, where like the most well capitalized guy can like suck the oxygen out of the room for all the other competitors to the point where there are none, and then they just sort of reap the spoils. So, man, I don't know. Like, I'm just, you know, it's probably heuristic. It's probably not a good analogy, but when I look back, I have mental models that like remind me of things I've already seen, and you know, like Chainlink could be one of them. Miners could be one of them.
It's a fair question to ask. I don't think Chainlink is going to be one of them, because I think for Chainlink to get back to all-time highs, I mean, it is a 5x, but like I think that it's sort of like in its own league. If it's sort of generalized niche industry succeeds, if its use case succeeds, I think it's going to do very well. And I don't see it being like 15 years to get back to all-time highs. But
me neither.
I think that analogy looks good maybe in other areas. Like, I don't know. It's possible something like, what does Uni look like these days? What does the Uniswap chart look like? All right, let's pull up the Uniswap chart. Oh, okay.
Better
yeah.
zoom way
I
the
think this
fuck
works
out.
a little better. Can we get the Uni chart up? There we go. So yeah, for those of you not watching the stream, Uniswap was given out for free.
Yeah.
You just got it. It's a free coin. A lot of people dumped it immediately. It dumped back down to $1 or so.
Hold on. Can you? What's like the earliest date of that chart? When was sort of that Uni airdrop?
I mean, it was around September of 2020.
Okay,
I think.
that was like DeFi summer.
Yeah, I mean, it went sub $1, maybe 50, 60 cents. So people just got this and they were like, yay, free money, and dumped it. It then ripped from 60 cents to $45 in a span of like, what was that? 220 days, barely half a year.
Christ, you degens.
Little 100x from the low of the airdrop. But then it did this NASDAQ bubble thing, right? Like, this thing has just gotten slaughtered, and we went from $45 on Uni all the way down to $3.
First of all, I love where your head's at by bringing up Uniswap, because this is sort of the one that will look like the NASDAQ.com stonks that like look like they're dead, but then actually become very valuable.
Yeah, it's totally possible. And if you look at the Uni chart, it just looks dead. It's not making new lows, which is cool. Like, this kind of $4 zone is pretty decent as support. If we zoom way out to before the rip in 2020, we did have this little. We're really gonna zoom in to see it, but we had this little accumulation range right before the rip in November 2020. But $3 to $4. That same zone is kind of holding right now as support, and actually we've technically been making higher lows, so we could draw like a little bit of a meme triangle here.
God damn it! Don't make me buy this stupid shit.
We love the meme triangles. No, I don't trade triangles, but there is some sort of compression going on here. So how long does this take on Uniswap? I don't know. It is a project that's stuck in absolute limbo because it's got the magic fee switch, and you've got this project that generates infinite money on unbelievably low overhead, right? It's like one of the most insane businesses in the world. Like, if you look at the revenue that Uniswap generates per line of code is like a joke. Like, especially before Uni v3 came out, like the Uni v3 code was so simple. Like, somebody's got to look up this stat, but it was unbelievable. Like, the revenue per line of code for Uniswap was extraordinary.
Yeah, what they're like operating margin, right? Like,
and they had like, I don't know, they had like 3 employees.
That's it. Like, you don't need anybody with hate and just run this thing.
But as an investor, like you're holding a worthless governance token because the government won't let them turn on the fee switch, and all these funds that could be directed to token holders would render it a security, and so we're just sort of playing this game of chicken. But at some point, as an investor, when do you turn around and go, I don't. This kind of feels like the ETF chicken, right? Where you know the fee switch is getting turned on. It's getting turned on at some point. But is it in a year? Is it in 5 years? Is it in 10 years?
Like I'm not gonna wait 10 years, but
maybe you would. Like if I told you this token is worth $400, with the fee switch on, and it's $4 right now, you're probably willing to hold it for 10 years.
God damn it.
You hold 10 years for 100x.
I know.
So there is some point where the market's probably like, But I think it's interesting to compare Uni to a token like Maker, right? A token that is actually returning,
like making money today.
Yeah,
and
making
returning
money
it.
today. And then there has been this like shift in how the market views some DeFi tokens, which were just absolute memes for a long time. Maker ETH was one of the most hilarious charts ever. It was just free money to basically like deposit ETH and Aave, borrow Maker, sell it for more ETH.
Short Maker.
It was just a money printer. But that has changed, and since May or so, Maker up 167%. Looked kind of obvious in retrospect. It kind of looks like Uni does now, to be honest. To be honest, a bit of a kind of flatline bottoming formation, and then whoop, up only.
Could Uni be next?
Maker's doing very well. Another project that's kind of in this, I would say Maker's kind of in this real world asset meme we've got going on, which I'm liking. I'm digging the meme. Kanto, another coin that is really Kanto is a layer 2. I think originally built on the Cosmos stack, but that I believe they've pivoted to be an Ethereum layer 2.
Oh my god!
And right around the time of that pivot,
so hard.
Yeah, just up only. So Kanto had a nice little pump to start the year. We pumped from 7 cents to 82 cents. I held this move all the way up, and didn't take any profits. So good job, me.
Yeah,
1,000% move in the middle of a bear market, no profits.
You're better than that.
Yeah, but recently we've pumped again. We're up 250% off the lows from September. Huge move. Kanto's been trying to really put its foot forward as like the real world asset.
Okay.
Like layer 2, and a lot of people are embracing this as like a narrative, and it's a good narrative because if we can get hundreds of billions of dollars of like maybe hundreds of billions is like generous, but we could of like T-bills on chain, this like tokenized collateral asset that yields 5.5%. That would do wonders for crypto prices to be able to, because right now for the last couple of years, like everybody's been just abandoning ship on crypto because there haven't been any yields. Although worth noting, I checked Aave today. I was getting 9.5% on my stable coins, like my last remaining stablecoin orphans that I have like parked in Aave.
Hell? 9%? So, well, I saw Coinbase was giving like 5% on USDC.
Mm-hmm.
I mean, that's compelling.
Yeah,
but I didn't know Aave was giving 9% on USDC. I got a lot of that shit left.
Yeah, so we've got some green shoots going on here.
So we talk a lot about crypto, but there's like, when you're like zooming out, right, and you're constructing a portfolio. I think we're talking sort of like the growth side of it. I think that's cool. There's other growth shit that exists on Earth outside of crypto, and you'd probably, as you're constructing a portfolio, you'd want to have multiple outs, right? Not just crypto, right? So like, there are a lot of people in our Discord who are like, so I'm gonna go out on the risk curve. I'm gonna buy fucking ETH, and then I'm gonna buy little shit coins, and then I'm gonna buy shittier shit coins, and whatever. It's like, okay, but there's other things that exist too, like other narratives, like AI or this like mixed reality metaverse, or there's compelling things happening in biopharma, like with the weight loss drugs. There's so many things to really make money on, and we're so like crypto focused. Is there any that sort of interest you at the outset?
So, yeah, let's pivot. Let's do a bridge pivot. Let's stay in crypto, go to stock, still kind of be in crypto, and then I think we'll close up with some TardFi stuff just to bring it home, because I think we ended up being a little more crypto than we wanted to be with this episode. But it is what it is. We're getting a lot of requests in the chat for coin.
Oh yeah, yeah, coin.
Before we, I got a lot of trash on this chart here. Clear this. All right. We'll go to the chart. Let's not go to the chart just yet. I first want to hear your perspective on this as sort of like a non-chartor.
Yeah.
How are you thinking about the company just from like a traditional allocator perspective?
Yeah. So like what I see with coin fundamentally is like, like it's heavily tethered to crypto, which I also am. Like I'm like a crypto enjoyer, just like all the rest of us are. And Coinbase seems to be sort of like the last man in the arena that we all trust. And when FTX goes down, Coinbase price goes down, but their competitive positioning goes up. This is strengthening Coinbase positioning. And then you talk about regulatory risk. Well, like at some point regulatory risk becomes like an asset, because when you have like a US based business that can service the globe, we sort of want that to be in the United States. So for me, I'm thinking like, well, these are fundamentally bullish. And then looking at, their SEC filings, like, trading volumes are down, so their revenues are down. That's sort of like natural in a bear market. But like, where the stock is today, trading at, 6 times sales on a sales figure that's like been increasing year over year, fine. Like during a bear market, that seems like sort of like reasonably priced at sort of worst, So like, we've talked about on Alfalfa, like I'm sort of a coin YOLOer. I think I see Coinbase, the stonk, potentially having volatility, meaning it could go lower, but like I would use that as a buying opportunity. And I see this thing being incredibly valuable in the long term.
You were a big proponent of the debt back in the day. I remember when we were doing this pod, you were looking at Coinbase debt as an interesting trade, but it sounds like you want more exposure to the stock these days.
Well,
right?
Because we haven't talked to like portfolio construction at all, but like,
we were supposed to talk about that episode.
Well,
this episode.
we can't. Like,
maybe next time.
Yeah, maybe next time. But like, like I'm building portfolios, not positions. So like, we love the barbell on our pods, and I still do love that. And the Coinbase debt is like something that I considered like incredibly serviceable. So it's like low risk. It was yielding 3.25% or something, like, not a great yield, but it was trading at 60 cents on the dollar. And, that to me seemed like irrationally low. I bought the Coinbase debt. Those bonds are up 30% since I bought them. Nice. It's still yielding. So like that to me was like like
what is the yield on them?
3 3/8 or something, like not a great yield.
Not a great yield, but the price of the bond is going up and you're getting paid that dividend.
Exactly. And
yield
like,
rather.
Yes. And like I'd like probably close them out now and like move into something a little more juicy, because like the juice has been squeezed out of that. But like all the time I'm looking for sort of like the best risk adjusted returns, and like to get 30% on a Coinbase bond, not even including the coupon, that's pretty solid. But like I like the stonk now, because like, we're at $77 or something, and I think I can see this thing going to 200 plus.
I would own more Coinbase stock, but I'm sort of trapped in a lot of crypto now that I don't want to sell for tax purposes, and I have a lot of money on chain So I bought a bunch this summer, fortunately. So I have a bag I feel kind of good about, but I want more. I think if I zoom out, not looking at the chart for a second, and just think about what Coinbase is. I mean, what is the market cap now? Like 18 billion,
Yes,
or something. There's so many dumb companies that like Pinterest comes to mind. Pinterest is about 18 billion, right? So you're like, what do I want to own? Do I want to own this niche social media company that suburban white women really like to use for recipes, and I don't know how well they monetize? Like, I used their ad platform, it sucked. Or do I want to own maybe the next Goldman Sachs? Like, if a digital, like, it's crazy to me. But even if you just comp it to stuff in crypto, I mean, Bitcoin is well over $500 billion now. ETH is hundreds of billion, or maybe two or 300 billion market cap. Like, it seems so badly mispriced, and the reason for that is probably because it's similar to the kind of like nether region Bitcoin has been occupying for most of the year, right? Where it was like, obviously, things are obvious in retrospect, but in retrospect, obviously undervalued. But where were the flows to bring Bitcoin back to value? We torched the on-ramps. We made the space toxic. We made big money not want to touch it. And if you think about coin, like it's unique in that it occupies this random area of purgatory, right? Where non-crypto people don't want to touch it because it's crypto. And then like all the crypto people were like, well, why do I want to buy a stock? Why wouldn't I just buy ETH? Why wouldn't I just buy Bitcoin? So I think for a long time, it just had no natural buyer.
Yeah, had no buyer.
It was just in this little box by itself that no other stock really. I mean, maybe like miners occupy that space.
I agree with you, and I would even take it a step further, where like stock investors, like we have this this transparency, based on like SEC filings and audits. We can see the company's profitability, right? And like Coinbase's profitability went into the dumps, right? Its revenues went into the dumps with like crypto trading. There's like pure apathy. There's no trading, so there's no trading volume, so there's no revenue. So like Coinbase, from like a fundamental standpoint, looked really unappealing. But what I see is like a company that is probably going to expand from being just like your trading platform to be sort of like your everything crypto, sort of like your bank, your
it could be your like I think there's this sort of dark horse potential for Coinbase. It's like a Trojan horse to maybe not usurp like a Goldman or a JP Morgan, but to eat away like an incredible amount of market share, because I think there's so many younger people out there who don't really like banking, they don't identify with banking, they're like into tech, and as they own more of these digital assets versus traditional assets, they're going to naturally want it. Like, I personally, if Coinbase had like a bank that was similar in feature set to the bank I currently use, and like if I could have my bank plus Coinbase plus perps plus options plus like a Coinbase brokerage where I could trade traditional assets, I would move all of my money.
It would be
there.
immediate,
and I would be very happy with it. And I think there's a lot of people who feel the way that I do. Not only that, but there are a lot of these people. Like, if you are a long-term bullish on crypto, if you think crypto is going to become a $10 trillion, $20 trillion plus asset class, all of this current Coinbase clientele is possibly a bunch of like future very rich people.
Yeah, future billionaires. We're all future billionaires.
So there's this sort of like, companies have like a sort of revenue per user metric, right? And obviously financial companies have like a very high, per user valuation, right? But I think Coinbase's has like a little more convexity to it than the average bank, because like what Coinbase deals with is crypto. And as crypto's value goes up, Coinbase's value goes up. But then the customers of Coinbase's net worths are going up, and then you have this sort of virtuous cycle where Coinbase's customers get richer and richer and richer, and they become more valuable as users, and then the stock becomes more valuable because its users are more valuable, and then like crypto goes up because those people are worth more and they buy more crypto. It's the flywheel. But we're going in the right direction now, not the direction we've been going in
and
the last
I think
couple years.
I actually think your vision is probably going to play out to be close to reality. Like, we've talked about on the pod or on Alfalfa previously, where you're like, you own a lot of spot Coinbase stonk, and Nick and I have talked about owning the call options, and like what you're describing takes a lot longer than December of 2025. So like that makes me nervous as like a call option buyer, because like, here's what's going to happen in the near term. In the near term, spot Bitcoin ETF is going to get approved. And, like Bitcoin trading on Coinbase, the platform, accounts for like 25% of the revenues. So like that's going to go down, so like revenue is going to go lower. I think like this could be sort of net negative for Coinbase in the immediate term. But on the other hand, it's like when Bitcoin price goes higher, then like crypto, everything goes higher, and maybe Coinbase goes higher. But like, I think what I'm looking at is like how best to play it, right? If we agree that this is a good thing to own, then how do you execute? And execution fucking matters.
Just buy the stonk.
Buy the stonk, yeah, or roll the calls, roll them, and I think that'll pay off too. So,
all right, cool. Let's pull up the chart. Pull up the Coinbase chart. Coinbase is a very difficult stock to trade right now, and the reason it's a difficult stock to trade is because it is currently sitting at its range equilibrium, right? So if you take this entire range that it's been trading in since June of 2022, right? This range goes from 116 all the way down to $32, right? Look where price has been sitting. It's basically at the EQ. The range equilibrium is about $74, right? As a general principle, when you're trading, if you are trading positions at the equilibrium, you're probably just getting chopped unless you're just buying for like a long-term hold, because you are at the sort of average price, and price will sort of stochastically move up and down about that equilibrium. But really, if you are like a momentum trader, or if you're a swing trader, you want to be trading some sort of break outside of that equilibrium, outside of that range. So it's a tough spot to trade from here. I think if you are a long-term holder, right? If we zoom this chart way out, I mean, to me, I think Coinbase at 18 billion is silly. I think it should be, I think it can be a 10x. Like I really do. I think it can be $100 stock. I think even if you want to call it like a 5x, and maybe it's a $300 or $400 stock, this whole range, when you zoom out, I think 10 years from now, is just going to be an accumulation range. So I think if you're if you're bullish on the stock, you buy it here, you buy it lower, you keep buying it lower. I mean, realistically speaking, from like a technical perspective, the protected low, the low that shouldn't be violated if we want to be bullish, is all the way down at $46, right?
I would buy the fuck out of $46. By the way.
I doubt we go there, but anything is possible. The last point of demand before we had that huge move up that almost took us to the range highs over the summer is this kind of $65 to $46 range. This, I think, is like really your golden pocket. Like, I think if price tests this range, like I'm going to buy more down here. This is the price where I will buy more stock. This could be one of those situations, though, where you get the huge impulse and then it just never goes back. Like, sometimes this happens with big moves. This is why trading is so hard. You don't always get your like nice little clean retest into the
dream
zone.
entry.
So at a certain point in time, like if you really think the stock is going to $300, $400, $500, $700, right? You have to ask yourself, am I going to sit entirely sidelined in cash at $78 because I think it's going to go to $55 and miss that entire move? Or do I like allocate a bunch here and then like just use this mental model? Like, okay, how much cash do I need to be like excited when it dips?
Right. Okay. So man, that because you basically answered my question. Because my question was like, what percentage do you allocate now? And that is a moving target for everybody. You know, like my initial thought was like 25% or something. But it is really more about like, how do you feel, you know, when or if the stock goes down, you know, another 20% from here.
Yeah. This is a mental model I use all the time. I think about like, am I rooting for price to go up or am I rooting for price to go down? If I'm rooting for price to go down, it means I don't own enough of it.
Yeah.
Right? Like that's what happened to me over the summer. Like I was like rooting for Ethereum and Bitcoin to go down. And I'm like, wait a minute. I don't own enough of this stuff. I'm rooting for it to go down. So you try to like get your allocation to the point where you're like actually psychologically indifferent.
Damn.
I don't care if it goes up because like I'm getting richer. I don't care if it goes down because I get this fat pile of cash to buy more and I really believe in it, right? That's kind of where you want to target.
Clip that moment, Jordan. That was a pretty fucking good one.
So if you have no allocation to an asset, that's like a really good, like how much do I buy today? Say you got like $1,000, you're like, I want to buy some coin stock. That's probably not like a large one. Let's go $10,000.
Yeah, you need a little more than that.
You need more than like 8 shares. Let's assume you're fortunate enough to have $10,000. I want to put it in coin stock. Do I buy it all today? By the way, none of this is financial advice. Do we have to start saying that now? It's not in the logo anymore. But for me personally, what I would do if I had $10,000 and I was like, I want to buy coin stock, the day one thing is I go like, okay, let's imagine that I've allocated some percentage of this and I have some percentage cash. How much cash do I need where I'm actually indifferent to this thing going up or down? Like I feel kind of good either way. And that's kind of the amount I buy. And then I set the rest of it aside to DCA in, whether I'm going to buy weekly, monthly, or daily, or whatever your methodology is. It doesn't really matter. But that's kind of like the mental model I use to just like allocate immediately. And I find it works pretty well for me. So hopefully that works for other people too.
I love that. I love that, man. And, you know, we had a lot of shit on the docket today, but this was our first episode. Like, we could go deeper and deeper into sort of like non-crypto stuff, but I feel like this is a pretty good spot where we could like, if people like this stuff, we could, you know, expand to, you know, other things we like on a future episode if this is something that people liked.
Yeah. And I don't know. I'm doing a lot of stuff in TradFi these days because crypto has been pretty boring for the last couple of years. So I have been thinking about stocks a lot more. I've been thinking about, you know, investing in alternative assets like gold and trading currencies and bonds and all this stuff. So I think there's a lot to talk about. I don't know like how much of the people like just want crypto stuff.
Send it to Valhalla,
but I think this other stuff is interesting. And I think in looking at stocks, like it's opened my eyes. Like you can get some pretty good gains in stocks. Like there's some movers out there in both directions.
Even in fucking boring ass shit like Coinbase bonds, you know, like getting 30%, or in Verizon, you know, already up fucking 12% since I mentioned it. You know, there's like a lot of things out there to make money on, and you know, we can talk about all of it, I guess, like on future episodes. But I feel like this was like a very informative one, helpful for me. I don't know. I think this is a good spot for us here.
Yeah, I enjoyed this. It's been very fun. Sorry, chat. I tried to just casually talk about some stuff you guys were talking about in the chat, but I need to do a little better at talking directly to you. I know some of you guys had some chart requests. I saw what's TWL? Is that Twilio? Twilio.
TWLO.
Oh,
that's a fallen angel.
Wow. Woo! That is a. Oh my god.
Yeah. So.
Tunsky.
We got. Oh my god! From the rafters, from the bleachers, Tunsky with $69.69.
We're gonna have to put a Tunsky plaque on the wall here.
We need a Tunsky shrine in our studio. Thank you, Tunsky.
Let's go out with the. Do you have any Twilio takes?
Yes,
okay.
I have an anecdote about it.
Okay, give me your Twilio take. Let's get the camera on your beautiful face for a bit, and then maybe we'll pull up the chart and see what that looks like.
So
What is Twilio for those out there who aren't?
Twilio
aren't
is a tech company that is involved in basically when you make a reservation at a restaurant, or when you book an Uber and then you get a text back saying hey, this guy is 5 minutes from your house, or your reservation is ready. Twilio is the company that does that. And Armand's little brother, our fearless leader Armand, his little brother.
Oh, that was his.
He was a salesperson at Twilio, and I remember when you were looking at this fucking chart, Armand's little brother, he had his RSUs, he had his options and everything for working at Twilio from a young age. He told me, he's like, Eric, I'm rich as fuck. Don't talk to me about stocks. I know what the fuck I'm doing.
Oh, no.
And I told them, I was like, dude, you should probably hedge this portfolio because you got a lot to protect. And he's like, well, Twilio will never go under $150 ever. And I was like, that's pretty famous last words. And I don't know. I don't even know what it is today.
It is $51.
Yeah, and at the time he said that, Twilio was probably at $250, and he was like, "Well, fuck, if it goes to $150, I'll be okay. I'll never go below $150." And I was just thinking, I could help you, dude.
All right, I've never looked at this chart, so we're just gonna we're doing it live. Let's pull this bad boy up. This is the famous Burj Khalifa chart pattern.
The Burj Khalifa.
Is that the first time you've heard that?
Yes. Thank you so much.
It's very, very, very well known. I didn't create that. It's a very, very well known trading Twitter meme. God, this is ugly. This reminds me of the PayPal chart, actually. Although I think the PayPal chart looks a little better than this one. Let's just zoom out to the monthly here.
Oh, that's the Burj Al Arabi.
Oh, it's a big old middle finger to Armand's brother's portfolio.
I think Armand's little brother, don't fucking cry for him. He made it, and he's a good-looking young man. He's fine.
I don't feel bad for him. He's living he's crushing life.
Yeah.
Damn. I mean, okay. So, origin of the move. Something I like to look at. This $71 to $25 range. Okay, that's kind of your. If it goes below there, it's just going to zero, right? So, if you're a bull, it's in the spot where you want it to be. The equilibrium of that range is about $47 or so.
We're right there.
If we zoom in, yeah, we're right there. Look at we get some monthly candles closing above the equilibrium after dipping into it. Good early sign. I don't know if you're catching a falling knife at this point. I think the knife has already fallen and stabbed 80 people on the way down. This chart is still technically bearish, right? There's no higher highs being made. There's also no lower lows being made. It is doing the.
It's chain linking.
It's doing the It's not really chain linking yet, but it's kind of doing it's doing the triangle thing. It's compressing. Hopefully to go up, but we got a little wedge. I don't really trade these because they basically mean it could go up or down very rapidly, which is in and of itself isn't particularly useful. I think if you have a fundamental reason to think this company is going to do really well, then this is probably a good level to buy at. You are down unbelievable amount from the high.
Yeah. I guess when I look at large cap tech,
89%. Oh, baby.
When I look at large cap tech like this, any large cap tech, all I want to say is wouldn't you just rather own Google and fucking Meta and Microsoft? And that's all I say to myself, and then I just buy more of those.
Super valid question. We got Subhang. I don't know how to pronounce your name. I'm sorry, man. He's very aggressively text to buy, all caps.
Oh yeah. Well,
Is that what Twilio's doing? Text to buy?
I guess so, man. Fuck, I don't follow this thing. Look how fucking far it's down.
I mean that was a big thing in crypto. That's what the remember the trading bot, the Unibot, the Telegram trading bots. Chat to buy coin, text to buy coins, basically. So, narrative makes sense at first glance. As a trader, I don't see anything here to give like a trading entry. Like this could definitely just go lower from here. Like this could run the $39 lows for sure. And then like even though it's down 89%, right? Like if you go down to the new lows from here, even just yearly lows, you're still eating 22% to the downside.
Just imagine if it just doesn't even get outside that shaded zone. Like it just languishes and like the Magnificent Seven just keep crushing.
This is the big shaded zone. Like if you zoom in, you're like, okay, where actually was there demand? We can draw another magic rectangle here. This level here from $23 to $35. That's looking pretty good.
You buy there.
Yeah, like that. Given no other information on the chart, that's where I would consider buying.
There you
that's
go.
A smooth 40% down from here. If I see something on the chart where it's rips up, takes out a critical high or something, some inclination that the stock wants to move. If I'm a momentum trader, yeah, I buy there. Maybe you're like a fundamental person, you like it at this price. It is like a decent price, all things considered. If you are bullish on the stock, I know nothing about the fundamentals, what the company does, whether it's like an actual business. The lines don't look amazing. So,
well, I hope for Subhang's case, he's laughing all the way to the bank, right in our faces. I hope that.
Yeah.
Text to buy, baby.
Calcium's asking for general thoughts on SPX and NASDAQ.
Well,
let's close there like really quick.
Your NASDAQ call was just fucking poignant.
I had a great week last week trading NASDAQ. Like, oh man. I caught the short from almost the top. I caught a long from the bottom, and then got back in the short. I actually closed it out like yesterday, a little bit early. Do we have the NASDAQ chart up, Jordan? All right, cool. So real quick here. If we zoom out a lot, let's go to the monthly chart, NASDAQ. I think it's a little clearer what's happening. We took out this 15.2K high with like a really big impulsive move. That to me is like really bullish. It's really bullish on a higher time frame, right? Because the origin of that move is way down here in like sort of like the 12K range, and that is like that's probably about a 15% move down or so. And actually, that's even more than that. Why is my ruler's not? There we go. 15% down. It's a pretty painful move in stocks.
That would be tough. I mean, it would all be driven by the fucking big tech ones, which they are. Like Meta reported earnings today. Google reported earnings yesterday, down 9%, down 6%. So like this will probably continue. Like I think what you're drawing out is probably like set to continue.
Yeah, like if this was like this like 1 minute chart, you'd be like, oh yeah, it's gonna go back down to that little area of consolidation and maybe go up to the highs. No big deal. And that's probably the base assumption here. When you get these big inefficient moves up, green candle, or wait, I was told these candles aren't white. It was a light blue candle.
Light blue
candle. You get these big moves up. Price can go down through them just as quickly. I think if you look at the weekly, there's some clearer targets here. I tweeted a few weeks ago about these lows at 14,242 or so. That to me was the target for my short. I ended up just getting out of it because I was like, I don't know. Like, I got nervous that the dollar was looking a little funky and crypto was ripping, and I was like, maybe I don't need this extra half a point. But it looks to me like we're gonna take 14,250 for sure. We've got an imbalance mid-range around like 14,100. That's like a potential interesting bottoming point for me. So I think we either bottom here in this like kind of 14.2 range, and then you can basically, you know, draw your little meme patterns and be like, oh, this is a bull flag.
I like that voice.
Yeah, and I don't know, maybe about yeah. So you could squint and call that a bull flag, I guess, if that happens, and then we go up only from here.
I tell you what, I do think that that squiggle you just drew, which ended in like an up only from here, like I'm like more and more in line with that conclusion, where it's like, you know, there's all this like bearishness out there where it's like this is dead, or rates are this high, or mortgage rates are this high, like all this fucking shit, and I'm just like, just buy and hold good assets. Like this is gonna work.
Yeah, like I want to be clear, like higher time frame. I mean, we did an episode about the upcoming melt up a couple months ago, and maybe that's just going to be in Bitcoin, I guess, at this point. But I still think that's going to happen. I still think S&P is going to 5,500, 6K. I still think Nasdaq's going well over 20K. Like I think that's going to happen. Question for me is like, how much of a pullback do we get first? And you know, my eye just goes to look at a chart and is like, where is there demand? And you know, aside from some sort of miraculous reversal, which does sometimes happen, the earliest point of demand I see is sort of in this like 13K range, which is still a pretty bad move.
Yeah, it would sting.
That would still sting. Like that's another 8% down from here. And that is a pretty big drawdown from the high. It's 18% down from the high. And if we get really evil, I think you can make a case that, well, actually the true demand for the move was actually this, right here. And then you could, where is this? We're around like, 12.4 thousand or so. And then we got this little low hanging out here that catches my eye at,
little
12,800
liquidation level.
Yeah, so
NDX.
when I see these setups on charts where I see like a really strong area of demand, an area that delivered like a market structure break, and then there's also like a little low hanging above it where people might be hanging out with their stops. That's liquidity. That's like a potential good draw for price. That's like a really interesting spot where you have like a liquidation level sitting right above like a strong area of demand, and you can basically buy people's sell stops right into like a strong area of a demand. That's a great setup, and this is where like I would get very long like spot stocks. Like I haven't really bought too many stocks in this run up because it was just it was a little
like
rich for my blood.
imagine the Nasdaq gives you that level. Then like for me, it's so simple. You just like buy Google, Microsoft, Meta. You know, it's so simple. You buy the shit that would take it down, and those companies aren't going anywhere.
Yeah. Good discussion to have to be had. Probably a discussion for another day. We have gone almost 2 hours at this point. Sorry, guys. Amazing for those of you who stuck around with us. Probably try to keep these a little bit shorter in the future, I think.
Still 23 people in the chat live.
Shout out to you guys who stuck through.
POAP time.
Yeah, seriously, we should. This episode needs a POAP. You went through like 3 failed streams, started 30 minutes late. Guys, honestly, a miracle anybody's in this chat right now. So thank you so much for sticking around. We hope you guys enjoyed this episode. If you like this a lot, you want us to do more of them, we are considering spinning this off into its own show. Maybe its own little YouTube. Just get very focused on the markets and the charts, and then maybe let the Alfalfa pod be a little more high level and philosophical, like we like to do. And I know there's a big thirst for the hardcore charts and the alpha out there. So maybe this is like a good way to give that to you guys. But I had a great time I thought this was super fun. I would
Likewise,
like to
man.
do it
Thank you
again.
for bringing the best booze on earth, and thank you everybody for sticking through the technical difficulties. This was
Absolutely, we might have to buy a computer for this one,
great. Yeah.
but we'll figure out the technicals in the future, hopefully. Once again, if you guys are not subscribed, please subscribe. Please follow us on the Twitters. I think we got our handles in the description somewhere. Most importantly, if you want to discuss anything that happened in the episode, you want to chat finance, crypto, philosophy, life, whatever, we're all hanging out in the Alfalfa Pod Discord. All links at alfalfapod.com. Come join us. We will let you know if we do this again and when we do this again. So stay tuned for updates on Twitter or X or our Discord. We'll let you know there. Hope you guys enjoyed this. Thank you for hanging out. And we will see you here back again next week at this time for your regularly scheduled Alfalfa episode, hopefully with most of the boys back.
Yeah. Later, guys.
All right.